So welcome to today's class. That is what we call the management accounting. Management accounting. I also understand there are those that are taking the fundamentals of management accounting in ATD. So MA on the fundamentals of management accounting. MA, or what we call in the fundamentals of management accounting. Now, to begin with, I will first highlight the topics that we'll be able to talk about. Then afterwards, in this case, we'll now be able to introduce ourselves to the very first topic, which is what we call the introduction to management accounting. So we'll begin with the topics that we're supposed to cover, where the topic number 1 will be what we call the introduction to management accounting. Introduction to management accounting. The introduction to management accounting. Now, when we talk about the management accounting here, it's generally the process of gathering, recording, classifying, presenting, and communicating the management information relating to the cost of a company. So majorly here we'll be talking about what we call the cost accounting. The cost accounting, where in this case you are gathering, you are recording, you are also classifying, you are presenting, and you are also communicating to the management whole information relating to the cost. That is on the management accounting. So on the introduction, we'll be able to know what we mean when we talk about the management accounting, what is the scope of management accounting, limitations of management accounting, and generally what we also call the difference between the financial accounting and management accounting, and then the cost accounting systems that an organization here can be able to use. When we talk about a cost accounting system, we are talking about the framework. We are talking about the framework in which which is used by companies to estimate the cost, to measure the cost, etc. We'll be able to talk about that in that topic. Number 2, we'll also be able to talk about the cost classification. Here we'll be able to know how we classify costs. We may classify costs based on what we call the nature or elements, may classify costs based on functions, may classify costs based on behavior, a question that was there in the last sitting. We may classify costs based on what we call the product, may classify costs based on what we call the controllability. We may classify costs based on financial accounting. We may classify costs based on what we call the decision making. So we'll be able to know out of each of the classifications what is the type of or the types of cost under that particular class. As it was asked in the previous exam of management accounting last sitting, question number 1. But 3 will also be able to talk about the cost estimation. When we talk about the cost estimation, is whereby we are predicting in advance the cost of a company. So there are various methods that we'll be able to use in this case to be able to determine the total cost of a company, or the equation that you can be able to use in order to predict for the cost. Now, the one number 4, we'll also be able to talk about what we call the labor costing. Now, generally, this is out of what we call the cost accumulation. Cost accumulation. In cost accumulation, we'll be able to talk about first the material costing. When I talk of material costing, generally here we'll be talking about the inventory management. The inventory management. When I talk of inventory management here, we are talking about the strategies that an organization can use in order to manage the inventory. So it is what we call the inventory management or what we call the inventory controls. After that, we'll also be able to talk about the labor costing. Labor costing here is also part of what we call the cost accumulation. And then we'll also be able to talk about the overheads. All that is what forms the cost accumulation. Overhead are those costs that cannot be individually identified within a particular cost unit. And therefore, we'll be able to see how we can be able to apportion them in between some production departments. Cost accumulation. After we're done with that, we'll also get to what we call the activity-based costing. ABC. Activity-based costing. ABC. Now, this is whereby now we apportion overheads depending on the activities. Generally, the cost driver. Be able to see that. Number 6, we'll get to what we call the costing methods. Costing methods here, we'll be able to talk about the job costing. We'll also be able to talk about the service costing. Service costing. We'll also be able to talk about the batch costing. Batch costing. And the last one, the process costing. The process costing. Then after that, we'll get to the number 7, where we'll be able to talk about the reporting methods. When I talk of reporting methods here, we'll just be talking about the marginal and absorption costing. Marginal and absorption. Absorption costing. The marginal and absorption costing. Number 8. Number 8, we'll also be able to talk about the cost, volume, profit analysis, cost, volume, profit analysis. Then number 9, we'll also be able to talk about the non-routine decisions. The non-routine decisions. The non-routine decisions. Number 10, we'll also be able to talk about what we call the budgets and budgetary control. Budgets and budgetary controls. Budgetary control. Budgets and budgetary control. And then the last one here, number 11, will be what we call the, 11 will be the standard costing and variances. Standard costing and variances. Now, for those that are doing the ATD on the fundamentals of management accounting, that will be the only topic that you're not supposed to cover here. Yeah, this one, the standard costing and variances. The standard costing and variances. So we will begin from our first topic as indicated there. We'll just begin with our first topic, which is what we call the introduction to management accounting. That is what will be our very first topic. And then afterwards, we now get to what we call the course classification. So begin with the first one. Introduction to management accounting. Introduction to management accounting. Introduction to management accounting. Introduction to management accounting. Management accounting. Introduction to management accounting. So management accounting, you say, is the process of identification. Process of identification, accumulation, process of identification, accumulation, identification, accumulation, analysis, 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 preparation and communication, preparations and communication, preparations and communications, preparations and communications of information used by the management, of information used by the management, of information used by the management to plan, information used by the management to plan, evaluate, control, evaluate, control, and make managerial decisions. Control and make managerial decisions. Control and make managerial decisions. Control and make managerial decisions. Managerial decisions. See? It may also be referred to. May also refer to the process of gathering, recording, classifying, presenting and communicating, presenting and communicating to the management, the information about the management, information about cost of a company, information about cost of a company, information about cost of a company, cost of a company. You write and say the objective is to help the management. The objective is to help the management. The objective is to help the management to undertake their functions effectively and efficiently. to undertake their functions effectively and efficiently. To undertake their functions effectively and efficiently. Effectively and efficiently. Effectively and efficiently. You can also add and say, cost accounting in an organization is used. Cost accounting in an organization, is used to determine the total cost incurred. In provision of services. Is used to determine the total cost incurred in provision of services or production of goods. In provision of services or production of goods. Now, what we're trying to mean in this case, in management accounting, is generally the process of ascertaining costs for management purposes, or what we call for decision making. So we normally use it to analyze, review, and organize the various activities in an organization. So the aim in this case is to ensure that the cost of an organization is minimized to the desirable level. So here in cost accounting or the management accounting, we'll just be able to know what are the tactics or what are the strategies that you can be able to use to help the organization to minimize on what? Cost. Generally, we are doing what we call the cost control. And we know cost control would affect the quality of the product or services. But in this case, it should be what? It should be avoided. So that is basically what we mean when we talk about the management accounting. Now, let's just continue. Let's talk about the comparison between financial accounting and cost accounting. Comparison between the financial accounting and cost accounting. Now, when I talk of comparisons, you can either talk about the similarities or the differences. So let's begin with the similarities. This is the similarities between the financial accounting and what we call the cost accounting. Now, what do we mean when we talk about the financial accounting? Financial accounting here is the art of recording, summarizing, analyzing, and interpreting financial transactions. But when you look at in this other case of management accounting, we are also doing the recording. We are gathering information. We are doing the presentation. We are communicating information to the management with regards to what we call the cost. So what are majorly the similarities here? Ya kwanza, we are doing the recording and a representation of the financial data, the finance and cost data. So you write on the similarities, number one, they are concerned with recording and a representation of financial and cost data. They are concerned with recording and representation of financial and cost data. Financial or the cost data. The other one, they apply the same principles of double entry. They apply the same principles of double entry when recording transaction. Apply the same principle of double entry when recording transactions. When recording financial transaction or transaction. Now, what do we mean here? We know the double entry system is from one of the accounting principle we call the duality concept. Now, what does the duality concept tells us? Now, duality concept tells us that, or it tells us that if you record one transaction or you debit one transaction, you have to credit another what? Transaction. This is also the same case in cost accounting. We have to comply with those the duality concept principle, the double entry system. The last one, number 3, you say they are, or they use the same documents. They use the same documents. When I talk of the same documents, we are talking about the books of original entry. You know what are the books of original entry? What are the books of original entry? Know them? We are talking about the sales journals, the purchases journals, the return inward journals, the return outward journals, the ledgers, all those ones. Is generally where we use the information on cost accounting. So let's talk about the differences between cost accounting and management accounting. Differences between cost accounting and management accounting. Differences between cost accounting and management accounting. So you can have two columns. You can have two columns, one for the financial accounting and another one for the cost accounting. Even if you talk the answer on the management accounting is still the cost what? Is still the cost accounting. Management accounting is still the cost accounting. Still the cost accounting. So we can begin with number 1 on the financial accounting. On the first column, financial accounting, you say the reports are submitted to the shareholders. 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 On the other part of cost accounting, the reports are submitted to the management. The reports are submitted to the management. Reports are submitted to the management. The other one, number 2 on the accounting, preparation of financial accounting. Preparation of financial accounting is a legal requirement. Preparation of financial accounting is a legal requirement. However, it is a legal requirement for all limited liability what? Companies. Is a legal requirement. Say, preparation of management accounting on the other side. Preparations of management accounting, preparation of management accounting is a voluntary exercise. Is a voluntary exercise. Is a voluntary exercise. Is a voluntary exercise. Number 3, financial accounting statements are periodic. Financial accounting statements are periodic. Financial accounting statements are periodic. The other one you say on the management, that the management accounting reports. Management accounting reports are continuous. Management accounting reports are continuous. The other one you say, the financial statements are prepared as per the International Accounting Standards. Financial statements are prepared as per the International Accounting Standards, or International Financial Reporting Standards. International Accounting Standards or International Financial Reporting Standards. International Financial Reporting Standards. The other one, on management accounting, you say the statements are prepared as per. Management accountants are prepared as per the Chartered Institute of Management Accountant. Chartered Institutes of Management Accounts. They are prepared as per the Chartered Institute of Management Accountants. Institute of Management Accountants. The other one you say on financial accounting. Say they are subject to financial statements are subject to audit. Are subject to audit. The one is on the management accounting statements are not subject to audit. Management accounting statements are not subject to audit. Management accounting statements are not subject to audit. Are not subject to audits. The other one you say financial accounting is conventional or static. Financial accounting is conventional or static. Management accounting is dynamic. Management accounting is dynamic. That is dynamic. It keeps on changing from one organization to another. Keeps on changing from one organization to another. It keeps on changing from one organization to another. It keeps on changing from one organization to another. Keeps on changing from one organization to another. One organization to another. To another. Now let's talk of the scope of management accounting. Can talk of the scope or the objectives of management accounting. Scope or the objectives of management accounting. The scope or the objectives of management accounting. Now, scope or objectives of management accounting. The scope or objectives of management accounting. Now, here we want to talk about the advantages of management accounting. Purposely, why do all organizations need to do what we call the management accounting? Generally, why do an organization have to ascertain cost of an organization for management purposes? That is what in this case we need to know. So number one, before we do that, then we can allow the Muslim brothers and sisters go pray, then we come and talk about the same, and then we talk about the limitations, and we get to what we call the cost accounting systems. Where we've left, I've left it at a point where we were to talk about what we call the objectives, what we call the advantages, or generally what we call the purposes of management what? Accounting, the objectives. Why do we do management accounting? So objective number one is we do that to control cost. Cost control. Cost control. Cost control. So what we mean is that cost management accounting enables an organization to maintain cost to the desirable level so as to minimize wastages in production processes. So you can write and say it enables an organization to maintain the cost at desirable levels, to maintain the cost at desirable levels, to maintain the cost at desirable levels, desirable levels, desirable levels, so as to minimize the wastages, so as to minimize the wastages in production processes, so as to minimize the wastages in production processes, so as to minimize the wastages in production processes, in production processes. Number two is on what we call the decision making. The decision making. Decision making. Say, the managers are required to make internal decisions. Managers are required to make internal decisions which are facilitated by the availability, which are facilitated by the availability, which are facilitated by the availability of the cost data, which are facilitated by the availability of cost data, which are facilitated by the availability of the cost data. Number 3 is also for planning. For planning, you say cost accounting uses the budgets. Cost accounting uses the budgets generated from the past experience. Generated from past experience. Generated from past experience. And you say they are prepared to incorporate. They are prepared to incorporate the future cost for purposes of implementation. To incorporate the future cost for purposes of implementation. Future cost for purposes of implementation. For purposes of implementation. Purposes of implementation. You also added the third one, number 4, the cost ascertainment or determination. Number 4, cost ascertainment. Ascertainment, stroke what we call the determination. Cost ascertainment or determination. Say, it is important to determine the cost of producing. It is important to determine the cost of producing a commodity. Cost of producing a commodity. Cost of producing a commodity. Cost of producing a commodity or provision of services. Or provision of services. Provision of services so as to help the management. So as to help the management. So as to help the management in making optimal decisions. So as to help the management in making optimal decisions. So as to help the management in making optimal decisions. The other one is the disclosure of waste. Disclosure of waste. Disclosure of waste. Disclosure of waste. Saying past experience of cost data. Past experience. Past experience of cost data. Past experience of cost data. On how to determine the future cost. On how to determine the future cost. On how to determine the future cost is used to improve efficiency. Is used to reduce, to improve efficiencies. Used to improve efficiency so as to reduce or eliminate unnecessary expenditures. So as to reduce or eliminate unnecessary expenditure. 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 So that is on the disclosure of waste. The other one can talk about the measure of efficiency. Measure of efficiency. Measure of efficiency. Say. For performance evaluation, for performance evaluation, the standards are set in advance. The standards are set in advance. The standards are set in advance, which will be compared with the actual performance, which will be compared with the actual performance, which will be compared with the actual performance, which will be compared with the actual performance to ascertain the difference. To ascertain the difference. What we mean in this case is you ascertain the difference and determine the reason for the difference. So, when measuring efficiency, we are comparing the actual performance with the expected performance. The last one is setting the selling prices. Setting the selling prices. Setting the selling prices. Setting the selling prices. Say, to come up with a realistic selling price, to come up with a realistic selling price, an organization must come up. An organization must come up with. An organization must come up with. Must come up with, or must take into account, not come up with, must take into account the cost of production plus the required profit margin. Cost of production plus the required profit margin. Cost of production plus the required cost of production plus the required profit margin plus the required profit margin. Now let's talk over the limitations of cost accounting. Limitations of management accounting. Management accounting. Limitations of management accounting. Limitations of management accounting. Number one, for the cost accounting, it involves elements of judgments, therefore not exact. It involves elements of judgments and therefore not exact. Involves elements of judgment and therefore not exact. You also say number two, it normally provides information for making decisions. It normally provides information for making optimal decision in specific circumstances. It normally provides information for making optimal decision in specific circumstances, and therefore there is no best decision in all circumstances. Therefore, there is no best decision in all circumstances. Therefore, there is no best decision for all circumstances. The other one is that it involves massive paperwork. Involves massive paperwork. Paperwork. What we mean is that the course items must be recorded what? Separately. So course items must be recorded separately, which in this case it will be too much involving paperwork. Other one, it is expensive to maintain a course accounting department. It is expensive to maintain a course accounting department. It is expensive to maintain a course accounting department in an organization. Course accounting department in an organization. Expensive to maintain a course accounting department in an organization. In an organization. Same. The last one. It only captures the quantitative data and ignores the qualitative data. It only captures the quantitative data and ignores. It only captures the quantitative data and ignores the qualitative data. And ignores the qualitative data. The quantitative data. Now let's talk about the management accounting system. Management accounting system. The management accounting system. Management accounting system. The management accounting system, which we also call it the cost accounting system. Management accounting system. Management accounting system. It's still a subtopic on the introduction to management accounting. So you write and say, this is a combination of procedures and records. This is a combination of procedures and records designed. Procedures and records designed. Procedures and records designed. Procedures and records designed. To provide information required by the management. Provide information required by the management. Provide information required by the management. Provide information required by the management in order to conduct the operations of the organization. In order to conduct the operations of the organization. In order to conduct the operations of the organization. In order to conduct the operations of an organization. The operations of an organization. Of an organization. Now let's talk of the conditions for an effective cost accounting system. Conditions for an effective cost accounting system. The conditions for an effective accounting system. Number one, it must meet the needs of. It must meet the needs of the manager. They must meet the needs of the manager. Number two, it must be simple, economical, and practical to use. It must be simple, economical, and practical to use. Simple, economical, and practical to use. It must be simple, economical, and practical to use. Practical to use. And then, it must be supported by all the parties. It must be supported by all the parties. Must be supported by all the parties. And then, it must lead to cooperation between the managers and employees. It must lead to cooperation between managers and employees. It must lead to cooperation between managers and employees. And then, the wages and employment terms must be satisfactory. Wages and employment terms must be satisfactory. Must be satisfactory. Wages and employment terms must be satisfactory. The other one is that the cost accounting department must be established. 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 And the last one is that the system put in place. The system put in place should be flexible so as to adjust on changes or for changes where necessary. The system put in place should be flexible so as to adjust for changes where necessary. So as to adjust for changes where necessary. So as to adjust for changes where necessary. To adjust for changes where necessary. Now let's talk of the difficulties in the installation of cost accounting systems. Difficulties in installation of cost accounting systems. Difficulties in installation of cost accounting systems. Difficulties in installation of cost accounting system. Number one, cost accounting systems. Number one, it is the lack of support from the top management. Lack of support from the cost management. Lack of support from the cost management. Lack of support from the cost management. Cost management. Number two, resistance to change by employees. Resistance to change by employees, especially in the cost accounting department. By employees, especially from the cost accounting department. Especially from the cost accounting department. Especially from the cost accounting department. Cost accounting departments. Number what? 3 is cost accounting installation can be too expensive to an organization. Cost accounting installation can be too expensive to the organization. 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 The other one, lack of adequate expertise to run the systems. Lack of adequate expertise to run the systems. Lack of adequate expertise to run the system. And then, forms or records might be inappropriate. Forms or records might be inappropriate. What we mean is that it may not contain adequate information necessary. So the information that is necessary. Now let's talk about the cost classification. Cost classification. Cost classification. Cost classification. Same. This is a process of grouping cost. Same. This is the process. This is the process. This is the process of grouping costs according to their common characteristics. 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 Common characteristics. And the purposes to why they are incurred. And the purposes to why they are incurred. Purposes to why they may be incurred. Say the various bases may include, number one, various bases may include, number one is the classification according to the behavior. Classification according to the behavior. According to the behavior. Classification according to the behavior. Say, this classifies costs depending on how the total amount. This classifies costs depending on how the total amount. Depending on how the total amount. Depending on how the total amount changes as the units. Changes as the number of units produced. Changes as the number of units produced. Changes as per the number of units produced, or activity level changes. Changes as per the number of units produced, or activity level changes. Or activity level changes. The costs include, number one, what we call the variable cost. The variable cost is same. This is a cost which changes with respect to the volume of production. This is a cost which changes in respect with, changes with respect to, not with respect to the volume of production, with respect to the volume of production. What we mean in this case, if the units increase, then also the cost will do what? Increase. Sawa. It depends. What we say is that it changes depending on the level of what? The activity. Sawa. Number 2 is what we call the fixed cost. The fixed cost. Fixed cost, same. These are costs which remain constant. These are costs which remains constant irrespective of the number of units produced, which remains constant irrespective of the number of units produced, which remains constant irrespective of the number of units produced, irrespective of the number of units produced, irrespective of the number of units produced. The other one, number 3, is what we call the semi-variable cost. The semi-variable cost. The semi-variable cost. The semi-variable cost. Semi-variable cost. Same. These are costs which are partially fixed, and partially variable. Partially fixed and partially variable. What we mean is a combination of fixed and what? Variable cost. It's just like an electricity bill. Sawa. Like electricity bill. That is a classification according to the behavior. Now let's get to the classification according to controllability. Classification according to controllability. Classification according to controllability. Controllability. Same. These are costs that are based on the ability. These are costs that are based on the ability to be maintained. Based on ability to be maintained at desirable levels by the management. At desirable levels by the management. Desirable levels by the management. Desirable levels by the management. They include, number 1, we call them the controllable costs. Controllable costs, we talk of them as the shutdown cost. Shutdown cost. And by the way, on the classification according to the behavior, it was there last sitting. Sawa. It was question number 1. One. Question number 1 on management accounting. Now we continue. We talk about the controllable costs or shutdown costs. See, these are costs which may directly be regulated. These are costs which may be directly regulated at a given level by the management authority. These are costs which may directly be regulated. Which may directly be regulated directly be regulated at a given level of management authority. At a given level of management authority, like variable costs. Variable costs can be controllable costs. Sawa. Yes, they can be, generally you can control them. They can be controlled by the departmental heads. The other one, number 2, is the uncontrollable cost. The uncontrollable cost. Uncontrollable cost. Uncontrollable cost, you say, these are costs which cannot be controlled or influenced by the manager concerned. These are costs which cannot be controlled or influenced, which cannot be controlled or influenced, which cannot be controlled or influenced by the manager concerned, controlled or influenced by the manager concerned. What we mean is that they remain the same irrespective of the decision made by the management. It's just like rent. Cannot control rent. Now we continue. Number 3 is what we call the period cost. The period cost. Period cost. Period cost. Period cost. Period cost. Same. These are costs which are controlled depending on the length or duration. These are costs that are controlled depending on the length or duration of consumption. Duration of consumption. Duration of consumption. Depending on the length or duration of consumption. That one is the product cost. Number 4, the product cost. The product cost. Product cost, you say, these are costs incurred in production and are controllable. The costs incurred in production and are controllable depending on the number of units produced. And are controllable depending on the number of units produced. They are controllable depending on the number of units. Number of units produced. Depending on the number of units produced. So that is the classification based on what we call the controllability. Now we can talk about the classification based on time. Classification based on time. Classification based on time. Same. Classification based on time. They include number 1. They include number 1, historical cost. Historical cost. Here we can also call them the sunk, or what we call the what? We can talk of them as the sunk cost, or what we call the past cost. The past cost. You see? These are costs that are ascertained. These are costs that are ascertained. These are costs that can be ascertained. Costs that can be ascertained. Ascertained. After they have been incurred. That are ascertained after they have been incurred. After they have been incurred. You can also say there are costs already incurred, and there is no future action or event that can change the incident. There are costs already incurred, and there is no future action or event that can change the incident. There is no future action or event that can change the incident. That can change the incident. That can change the incident. The other one is the classification by nature or element. Classification by nature or element. Classification by nature or element. Elements. Same. This classifies costs on the basis of physical characteristics. This classifies costs on the basis of physical characteristics. On the basis of physical characteristics. They include, number one is the material cost. Number one is the material cost. Number two, the labor cost. When we talk of labor, we are talking about the wages. When we talk about material cost, we are talking about the cost of purchasing the what? The materials. And number three, you can talk about the overheads. The overheads. Overheads. Now let's talk of the classification by product. The one, classification by product. Classification by product. Classification by product. Same. This classifies costs on the basis of identifiability in a product. This classifies costs on the basis of identifiability in a product. The basis of identifiability in a product. In a product. This classifies costs on the basis of identifiability in a product. In a product. They include, number one is the direct cost. Number one is the direct cost. Number one is the direct cost. Direct cost, same. These are costs which can be clearly identified. These are costs which can be clearly identified. Costs which can be clearly identified in a product. Can be clearly identified in a product. Clearly identified in a what? Product. So most direct costs are variable costs. That is what you need to note. All the direct costs or most of the direct costs are variable cost. Andika hivyo because kuna mali tutasoma that concept. Ni sawa? So most direct costs are variable cost. Most direct costs are variable cost. Second one is the indirect cost. The indirect cost. The indirect cost. The indirect cost. Same. These are costs that cannot be clearly identified in a product. These are costs that cannot be clearly identified in a product. These are costs that cannot be clearly identified in a product. The costs that cannot be clearly identified in a product. See? All indirect costs are fixed costs. All indirect costs are fixed costs. All indirect costs are fixed costs. The one is a classification by functions. Classification by functions. Classification by functions. Classification by functions. Same. Classification by functions. Same. This is where costs are classified according to the function. This is where costs are classified according to the function in which they are incurred. According to the function on the business in which they are incurred. 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 Say they include number one, the manufacturing or production cost. The manufacturing or production cost. Manufacturing or production cost. Say that this is a cost of producing or cost of producing a product or providing cost of producing a product or providing a service or providing a service. Number two is the administrative cost. Administrative cost. Number two is the administrative cost. Administrative cost. You say this is a cost incurred in the coordination and support of the product. In the coordination and support of the product. Costs incurred in the coordination and support of the product. Support of the product. Support of the product. The other one is the selling cost. The selling cost. Cost of creating awareness and getting sales orders. Cost of creating awareness. Cost of creating awareness. Cost of creating awareness and getting sales orders. Getting sales orders. The last one is the cost of, the distribution cost. Last one is the distribution cost. Distribution cost. Same. This is the cost. This is the cost of moving items to reach the customers. Moving items to reach the customers. Now, the last classification will be now the classification by decision making. Classification by decision making. Classification by decision making. See, this classifies cause. Classification by decision making, and you say this classifies cost. This classifies cost. This classifies cost based on relevance. Based on relevance. Same. Relevance is the ability to influence a decision. Relevance is the ability to influence a decision. Relevance is the ability to influence a decision. Ability to influence a decision. They include, number one is the relevant cost. They include, number one, the relevant cost. Say, these are costs which have the ability to influence a decision. These are costs which have the ability to influence a decision. These are costs which have the ability to influence a decision. Costs which have the ability to influence a decision. Number two is the irrelevant cost. Irrelevant cost. Irrelevant cost. You say this is a cost which do not have the ability. Is a cost which do not have the ability to influence a decision. Costs which do not have the ability to influence a decision. Now that is all on the introduction to management accounting, and also the second topic of what? Classification of cost. Sawa. So when we meet now in our next class, we now get to the computation part now. Cost estimation. That is where we'll begin in our next class. The cost estimation. So we're going to end at that point. We continue from there in our next class on cost estimation.